Hi, I'm Laura Rolfe, host of Powered by Franchising and CEO of Mint Franchise Consultants. Well, whether you're listening to this currently in April or at a later time of the year, I think it's always relevant to talk about the tax benefits of business ownership. So in today's episode, we are going to talk about the tax advantage nobody talks about, and that is the advantages of business ownership and how it creates tax strategy. Some of my clients are looking for tax strategies, reducing their amount that they owe to the IRS because they've gotten a severance package or a large bonus, or perhaps the stock market was particularly good to them. And so they're looking at ways to offset that income and reduce the amount that's owed. So business ownership is a great advantage way to take that tax advantage and also build a business. So today we're going to talk specifically about tax code 179, which allows business owners to deduct the full purchase price of qualifying equipment and assets in the year they're placed into service instead of depreciating them slowly into the year. So in translation, so what does that mean? So in 2026, this year, the Section 179 numbers include the maximum deduction of $2,560,000. So that's part of the One Big Beautiful Bill Act and inflation adjustments that sets those limits that are the most powerful they've ever been. You can have 100% bonus depreciation that has been restored to qualifying property acquired after January 19th, 2025. And then you can also deduct vehicles over 6,000 pounds based on the tax advantages there. Now, I am not a CPA. I am not a tax accountant. So a little disclaimer here that please do talk to your CPA about the tax advantages of the One Big Beautiful Bill Act and the advantages of business ownership. But I thought it would be worth discussing here on the show today. For small and mid-sized business owners, you also have the ability to write off the equipment, vehicles, software, build out expenses if you have a brick and mortar in the year that you start, but not necessarily over the next decade. So let's talk about some real world examples of franchises and some tax advantages and deductibility. Mobile franchises, as an example. Mobile franchises are things like pet care, fitness and wellness mobile studios, mobile service brands as well. So if you purchased a wrap van for pressure washing equipment, if you're scheduling a software launch in your territory, under Section 179, nearly the entire upfront investment can be deducted, reducing your tax liability significantly while you're building revenue. So if you have a pet care franchise, as an example, a mobile grooming van with tubs, dryers, tools, technology, the entire rig, the entire van, it's deductible. So now that you're building a recurring revenue business, you're not having to focus so much on what your tax burden might look like for the 2026 tax year. Let's say you're building a fitness or a wellness studio. The franchisees that are opening those this year are going to be able to write off the cost of the fitness equipment, the stairs, the gym membership equipment, point of sale material, etc., interior build out costs, thanks to smart tax planning. Same goes if you're looking at building out a med spa or a beauty location. Lots of tax advantages there. I have a friend, Jen, who invested in a vending machine business. And the reason she invested in a vending machine business, she built her corporate career. She had exited her corporate career, had a large severance package, and her accountant says, you need something to offset your compensation package when you exited. So she invested in a vending machine business. And that was entirely deductible in her first year in business. So that was kind of nice. She didn't have to pay those large taxes. Why this matters if you're considering a business ownership. Let's say you're a W-2 employee. Your tax strategy, I'm fumbling with my words here. As a W-2 employee, your tax strategy options are very limited. You earn, you pay taxes, and you hope your CPA finds something that you can take as a tax deduction. But as a business owner, you get to unlock additional tax benefits. I just wrapped up my taxes, and I had a little bit of an overpayment of my estimated taxes last year. But thanks to some of my depreciations, I was able to have a tax surplus instead of owing this year. So I was able to push that to my Q1 estimated tax quarterly payment. But you can take equipment, vehicles, technology. You can have a bonus depreciation for additional first-year savings. If you have a home office like I do, I can write off all of my own mileage rather than giving that mileage to my employer. I can write off my meals, operating expenses. I can write off this podcast as an example. So if you're considering a podcast, that's also tax deductible. All of my retirement contributions. So I contribute annually. I do the maximum contribution to my IRA, and that is tax deductible as well. And then the way that I structure my paycheck to myself is also, I can create some tax advantages. So if you're interested in exploring tax strategies and business ownership, I do encourage you to talk with your accountant or a CPA, somebody who's qualified to do that. Just wanted to put the spotlight on it since we are in high tax season to talk about the definite smart tax advantages of business ownership. If you'd like to take a look at some businesses that particularly play well in this ownership sandbox, please reach out to Mint Franchise Consultants. Kate and I can help you evaluate business opportunities that not only align with tax strategy processes, but also align with your business and investment goals. As a reminder, we work with over 800 brands in 65 plus industries. Our services are always free to you. We'd love to have a chat and help you learn a little bit more about business ownership. Thanks again for tuning in to Powered by Franchising, and hope that the tax gods are good to you this year. And if not, then certainly would love to chat with you about business ownership and tax advantages for next year's filing. Again, our disclaimer, we do encourage you to consult with a tax professional. Mint Franchise Consultants is not a CPA or an accounting firm, and we do not provide legal, tax, or accounting advice, but we can help guide you in finding businesses that are advantageous to your tax return. Again, visit us at mintfranchiseconsultants.com. Thanks for tuning in to Powered by Franchising.